These are the top 3 stocks to buy for 2026. The stock market is already off to an incredible start in 2026, hitting a new all-time high again today. With the stock market continuing the bull run that started at the end of 2022, I believe this is going to be another incredible year for stocks. And that is why I compiled this list of the top 3 stocks to buy for all of 2026. Now, for those of you who don't know much about me, my name is Stock Curry. I'm a former Merrill Lynch and Morgan Stanley investment banker, and I have over 25 years of trading experience. But don't worry, you don't need to become an investment banker to find these stocks. I've already done the research for you, and I'm going to give you my top 3 stocks right now. The first stock on this list is Micron, ticker MU. As you can see on the chart, Micron has been on an absolute rally over the past 5 months. And I have both fundamental and technical reasons for believing that the rally in Micron stock will continue. First, the fundamentals. Micron has a forward PE ratio of 10.83, making it one of the most undervalued tech stocks in the entire stock market. And today, Lynx Global raised their price target on Micron to $550 per share, while maintaining their buy rating. And Wedbush analysts suggest Micron Technology could gain from a tightening memory market. Micron Technology is expanding its capacity to meet high demand with a notable shift towards multi-year contracts and flexible pricing negotiations, which means Micron stock might not only outperform in 2026, it could be one of the best performing stocks for the next 5 years. And the reason for that is because AI memory is sold out, causing an unprecedented surge in prices. All computing devices require a part called memory, or RAM, for short-term data storage, but this year, in 2026, there won't be enough of these essential components to meet worldwide demand. And that's because companies like NVIDIA, AMD, and Google need so much RAM for their AI chips. 3 primary memory vendors, Micron, SK Hynix, and Samsung Electronics, make up nearly the entire RAM market, and their business is benefiting from a surge in demand. Micron told CNBC that we have seen a very sharp, significant surge in demand for memory, and it has far outpaced our ability to supply that memory and, in our estimation, the supply capability of the whole memory industry. Now, Micron stock is up 247% over the past year, and the company reported that net income nearly tripled in the most recent quarter. And now, prices for memory are rising. TrendForce, a Taipei-based researcher that closely covers the memory market, this week said that it expects DRAM memory prices to rise between 50% and 55% this quarter versus the fourth quarter of 2025. That represents a more than 200% annual increase in prices. And with memory prices increasing by 200% in 2026, it is no wonder that Micron stock is not only rallying, but is expected to continue to go up significantly in 2026. Quite possibly, we might see another 200% increase in Micron stock, and possibly even more. At most, Micron can only meet 2/3 of the medium-term memory requirements for some customers. But the company is currently building 2 big factories called fabs in Boise, Idaho, that will start producing memory in 2027 and 2028. Micron is also going to break ground on a new fab in a town called Clay in New York, which he said is expected to come online in 2030. But for right now, Micron is sold out for 2026. And with Micron sold out for 2026, and with them continuing to build new factories in 2027, 2028, and 2030, I do believe that Micron is not only the top stock for 2026, I also believe that this stock could be one of the best performing stocks for the next 5 years. And that is why Micron is my number one stock pick for 2026. Now, before we get into the next two stocks, my top three stocks for 2026, I want to give a little bit of caution, a little bit of warning, because I'm seeing a trend among retail traders that is very concerning to me. And I just want to give you a little bit of word of warning so that you don't make the same mistakes that thousands of retail traders before you did. When I looked at the trending stocks on Webull this morning, I noticed that most of the trending stocks were penny stocks. And the reason I want to give you this warning is because back in 2020 and 2021, thousands of retail traders bought penny stocks and they lost their shirts. NNDM had rallied to almost $100 per share and is currently trading at $1.70, down 98% from highs. BNGO is down almost 100%, having gone through multiple reverse stock splits. At the current reverse stock price, it was trading at over $8 million per share back in 2021 and is currently trading at $1.59. TDOC is another one of those stocks that ran up to over $300 per share and is currently trading at $7 per share. The reason I bring this up is because I don't want you to make the same mistake that people back in 2020 and 2021 did. A lot of people, when they're new to the market, they're not really sure what to buy. And so they watch a lot of videos on social media, on X and YouTube and Rumble and wherever, and they just buy what other people are recommending. And oftentimes you're looking for the stock that's going to produce the highest possible return. And usually that means some penny stock. And unfortunately, while those penny stocks could go up temporarily, they usually end up becoming major losses for the people that buy them. So when I saw this morning that the majority of the stocks that people were investing in on Webull were penny stocks, I became really concerned. And I don't want you to make the same mistake that people 5 years ago did in buying these penny stocks and holding them for too long and ultimately losing a ton of money on them. Now, if you are one of those people that is new to the market, you're not really sure what to buy, and you're just kind of watching YouTube videos, trying to figure it out and just buying whatever people recommend, I did put together an entire course to help you out, to help you learn how to find stocks on your own and how to do fundamental analysis and technical analysis. That way you know what you're buying. You're not just buying it because somebody on social media mentioned it. The course is called Trading Success U, and it includes an entire community of investors and traders just like you so that you can learn together. So you're not doing this on your own. My course is rated 4.8 stars on WAP, making it one of the highest rated courses on WAP. Everything I learned while working at Merrill Lynch and Morgan Stanley, I'm trying to put together into a single course to help you out. And because I am not trying to rip you off, I really want you to learn. I am literally pricing this one of the lowest prices of any course from anybody on social media. But because I really want you to learn, I'm actually offering $100 off right now. Just enter coupon code LIFETIME100 at checkout, and you're going to get this course for $299. And if for some reason you cannot afford $299, I do not want you to go into debt and put this on a credit card. There's another option. You can pay just $29 per month, and you get access to the exact same course, the exact same Discord, the exact same learning materials, and direct access to me. Again, I really want to help you out. I'm not trying to rip you off here. I want you to learn. That's why I've priced this at such a low price. If you want more information about the course, go to tradingsuccessu.com or use the first link in the description below. Now, let's get into the number 2 stock pick on my list. And that stock is MSTR, MicroStrategy. Well, now known as just Strategy. MicroStrategy had been trading at over $540 per share, but currently is trading at $162 per share. MSTR buys and holds Bitcoin. And over the past few months, we've seen the price of Bitcoin come down significantly from a high of $126 to its current price of $91. And that's why MSTR has fallen as well. But MSTR has always had a problem. And that is the fact that the price of the shares have always exceeded the price of the underlying asset. The problem with MSTR is that you could literally go out and buy Bitcoin for significantly less than the value of the Bitcoin that MSTR was holding, which means it never really made sense to buy MSTR because you were significantly overpaying for the stock. But something has changed in the last quarter. When we look at MSTR, we want to consider something called price to book value. And that is the book value or the value of the underlying assets. And it's taking the stock price and dividing it by the value of the underlying assets. And as you can see over the past 5 quarters, the price of the stock far exceeded the actual value of the Bitcoin MSTR was holding. At one point, you were paying almost 20 times more for the stock than it was actually worth at $18.86 5 quarters ago. But as the price of MSTR has declined, it has slowly started to get back down to a more reasonable price to book ratio. And now, for the first time, the price to book ratio is actually below 1, meaning for the first time in years, you are able to buy the value of MSTR's holdings for less than their actual value. In fact, you're able to buy MSTR's assets at only 87% of their actual value. And we've never seen that before. This is the first time in years that MSTR is trading below the value of the underlying asset, which means it's the first time in years that MSTR is actually a really good buy. Now, the one word of caution with MSTR is that it might continue to go lower. And that is because if you look at the price of Bitcoin, it is struggling right now, and we might go a little bit lower. Some people think Bitcoin could fall as much as $50,000 before it finally bottoms out. And if we look at the technical chart on MSTR, we see that it already broke below a very strong support level of 180, and now it looks like it might fall down to the next support level of 120. Still, with the price to book value at 0.87, it is a good buy right now. But I wouldn't load up heavy on MSTR because it's possible it might continue falling to $120 per share. 120 is where I would want to load up heavily. So this is a stock that I'm just looking to dollar cost average into right now, not looking to go heavily. But as I've mentioned in prior videos, I do believe that Bitcoin is going to bottom out this year and it's about to go on a major rally. I do believe that sometime next year or the year after, we could see Bitcoin hit $250,000 per share. And that means you're getting an opportunity to buy MSTR at what might very well be the lowest price it trades at ever again in history. Because if Bitcoin does rise to the $250,000 per share price, there's a chance that MSTR could get up to double its previous high, which would put it at over $1,000 per share. And by being able to buy MSTR currently at 160, or especially if you're able to buy it at 120, if it does run to over $1,000 per share over the next 3 years, you're looking at a massive profit potential of 700 to 800%. And that is why I believe MSTR is one of the top stocks to buy in 2026, and that's why I've got it on this list. The third top stock to buy in 2026 is SMCI, Super Micro. And this is another stock that's been extremely beat down and is currently in what's known among investment bankers as the accumulation phase. The accumulation phase is the phase at which investment bankers and large institutions start to buy a stock. It's after a stock has already rallied and fallen, and it's a point at which a lot of retail is no longer interested in the stock, and now large institutions are very quietly buying the stock in preparation of buying ahead of the next rally upward. Now, SMCI technically is at a very strong support level here at $30, but there's still a chance it might fall a little bit lower down to $25, which is actually a slightly stronger support level. So somewhere between $25 and $30, I would be looking to accumulate SMCI throughout 2026. Fundamentally, the stock is very cheap right now, especially for a tech stock. Its trailing PE is 23, which is very low, especially when you consider the average tech stock PE ratio is 30, and its forward PE ratio is exceptionally low at 15.95. Keep in mind, the average forward PE ratio of a tech stock right now is 26. So why is SMCI trading at such a low price right now? Well, the reason is because last quarter, they saw a 15% decline in year-over-year revenue growth. To make matters worse, they saw a 60% decline in year-over-year earnings growth. Now, that's a major red flag and a good reason for the stock to sell off. But when I started to dig deeper, I realized it was a one-time hit. In the first quarter of fiscal year 2026, SMCI's revenue and earnings declined 15.5% and 56% respectively. But this decline was mainly due to a revenue shift from the September quarter to the December quarter due to some last-minute configuration upgrades requested by companies. See, not everything is doom and gloom for SMCI. The company is positioning its business to gain from the AI wave. SMCI is spending a lot of money right now trying to upgrade in order to prepare for the next wave higher. And that is why I think SMCI is a great buy right now. In fact, I think there's a very strong case to be made that once SMCI turns around and starts seeing revenue and profit increases again, which they should see starting in Q2 of this year, that is when I think we could start to see SMCI stock rise. And based upon technical analysis, we should see it rise to around $55 per share. Meaning, if you're able to buy around $27.50, which is right in between the $25 and $30 price targets, you should see a 100% increase on the stock price in 2026. Of course, nothing is guaranteed. This assumes that the economy and AI spend continues to be strong. But just like we saw with our analysis with MU or Micron, the companies that are building AI and investing in AI are the ones that should outperform throughout all of 2026 and really for the next 5 years. So those are my top 3 stock picks for 2026. Let me know in the comments below what your top stock picks are.